Good morning, traders. It is Wednesday, October the 9th. Taking a look at the charts, we've got the SP 500, and you can see here, big down day yesterday, and today we're seeing a pretty strong pop in the morning. You can see let me just zoom in a little bit here. In pre-market here, we ran all the way up almost to pretty much yesterday's opening price, and since then it's pulled back a little bit. So huge volatility yesterday, big price action today in terms of price rallying back up and then moving back down. And overall, we've talked about this a few times. We are in this type of scenario right here where the market has sold off and it is rebounding, and we're at this 50-day moving average, and very similar to this type of price action right over here where we sold off, we rebounded, we're testing this 50-day moving average. And again, let's just look at it over here. This is where we're at. We're into this big, wild price action. And the question is it going to trade sideways for a while and then decide which way it's going to break? Or is this going to be rejected? And more or less, we're kind of here at this bounce, and we see a three-wave correction in A, B, C wave to cleanse the market, and we come down to these lows over here potentially, or potentially all the way down to this low over here. And obviously the market could reverse and start to rally to the upside, but right now it is stuck between this range here, which is this low, or you could argue this low here, and more or less this high. If it breaks out of this range to the upside, obviously would be turned bullish again. Right now it is neutral, trading in this sideways range. The trend is down, so it is still favoring a potential breakdown going further, but it is in a range, and we don't really want to get too involved until we see this take place. And really, the longer this trades sideways in this range, just like we saw over here in August, that means bonds will continue to creep up and move higher, which is what we are long. And being into this carries a lot of risk, a lot of uncertainty. So that's where we are positioned at this point. Now, if we take a look over at, let's take a look at bonds real quick. They're down about 0.1%, nothing too significant. More or less, if we look at bonds, this is what happened to bonds during the August correction. Bonds moved higher, and then when bonds broke out, when the stock market broke to the upside out of its range, we saw bonds pull back. And we're seeing bonds move up now. We've had a nice series, a rally, a bull flag, a rally. It's forming a bull flag here. We could very easily see this push up to test these highs from over here. And that's what we're in position for. And we'll see how things unfold. Now, overall, if the stock market does break down, we're probably going to see this continue to grind higher and go to new highs going forward. If we take a look over at the other safe havens, look at gold. Gold is up 0.5% this morning. Silver's up about almost 1%. But overall, the bias for metals is starting to change. It hasn't broken these falling trend lines here yet. It hasn't broken a previous pivot high over here yet, but it does have a nice pop. It's got a nice bull flag forming through here, and it's holding up at all these moving averages. And we're seeing some on-balance volume. It has been actually increasing, so there's accumulation going on, and price feels as though it's changing momentum, and I think it's primed and ready for a pop. If we were to take a Fibonacci extension on this, we can actually get an idea of where that upside target is. Let me just zoom in a bit more. We go from this low here to this high right here, and then we carry it forward down to this pullback low. You can see the potential upside target for the first initial kind of thrust for gold. We got a pop, we got the pullback, and then from here it would go up and it would test the 618, and then it potentially go up and test this 100% measured move, which is more or less this previous high right through here. So that's where we could start to see some action start to take place here. It's holding up fairly well. And if we take a look at silver, silver's got this nice little pause here, and it's actually starting to break out to the upside. Again, still in this down channel. It's still trending lower in terms of price action, but overall the pattern is starting to look and feel more bullish as we kind of mature there. Looking at GDXJ, had a nice pop there yesterday. Gold miners, again, same type of price action. It was in an uptrend. It's reversed. We are stuck in this down channel here. and we're just letting it do its thing. And it's not really outperforming too much at this point. So I like the actual setup in gold better than anything else at this point versus miners. But technically, if you get in gold, silver, or miners, each one of them, they're all pretty much the same play. You don't need to load the boat and own all of them. You can, but if you do, you take a smaller position in each. So all those positions averaged out equal one position, or else you're just adding lots of leverage or lots of risk to your portfolio, and it's not what you want to do. Taking a look over at energies, natural gas down 1%. We've talked about this. We're letting a bottom form. We're looking for something similar to this here. We've got this more or less. We saw the market sell off, had a big short covering squeeze, and then came down to make some new lows. And then it came up and built a little bull flag here. It rallied up, traded sideways, and then it popped even higher, traded sideways even longer, more or less building this kind of resistance area here. When we got long, we caught this move to the upside, and that's where we're at now. Is it feels as though we are here, and we're going to see this potentially chop around, build some type of a base. We can get long eventually, potentially on a breakout, or see some type of reversal pattern that unfolds over here, and then we can try and catch another move back up into this green area here and potentially higher going forward. Looking over at crude, up 1% this morning. Again, it's holding ground at this support zone, this long-term support zone, and you can see this level right across here. It is tagging and holding this level. At this point, we've got a drop, we've got a bear flag, a drop, a bear flag, a drop. We got another bear flag, and this drop here is fairly significant with this bull flag, meaning we could see a fairly sharp drop to pierce these lows, and then probably see some type of recoil again or test of that, and then for it to continue to head lower. So overall, crude is holding its ground here at key support, but it's still somewhat of a bearish pattern. And if we break and close below this level here around this 51, things can get pretty ugly going forward. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.